Our next guest is seeing some more opportunity in value stocks and abroad. Herro Oakmark, CIO for International Equities and Portfolio Manager David Herro joins us this morning. David, good to see you again.
Thank you, Carl. Good to be here.
So much discussion, same to you, so much discussion this week about valuations and elements of the market that are expensive after that Fed cut. I was a bit surprised to hear that you're seeing value. Is it mostly overseas?
There's huge valuation differentials, both in the U.S. and overseas. And what we're seeing are certain sectors which are trading at 9, 10 times trough earnings. Normally, we don't find value if it's low valuations at peak earnings. But we're getting towards the bottom of the cycle in agricultural and some of the automobile industries and companies. We're seeing very good opportunities in these sectors, even in healthcare, for instance. We own stock in a company called Bayer, which 2 of their 3 divisions are consumer health and pharma. And these companies are trading at low valuations in terms of trough earnings, which to us represents great value.
We did take note of some of the guidance we got out of Mercedes, and we got some pretty ugly EV auto sales in Germany and France in August. I wonder what you think of autos internationally right now.
It's a really interesting sector because the market is split between those who are sole EV producers and have to rely on this and have to compete against the Chinese competitors, whether it be China or if it happens on foreign soil. And then there's the premium producers. Look at Mercedes and BMW, which we're invested in. These are companies that are definitely struggling a bit in China. And it's not necessarily because of the EV competition. It's because of the Chinese slowdown. So these companies are struggling and they've made little profit warnings as a result of their Chinese operations. However, these companies do business all over the world. And the U.S. auto market in particular, which is a major market for both these companies, is not only near its trough, but it should perk up as a result of the lower interest rates. Don't forget that people, even in the premium end, finance or lease 50 to 60% of these vehicles. And the market's been slow in the U.S. It hasn't been bad, but it's been slow. And so the lower interest rates in both Europe and the U.S. should help the sales of premium automakers. And then you have to look at their valuations. They trade at 3 or 4 times cash flow, have billions of net cash on their balance sheet, and more importantly, they are still doing massive shareholder distributions in terms of high dividends and stock buybacks. So this is why we see a value proposition, despite, or maybe because of, the ugly headlines in the premium automakers of Mercedes and BMW.
David, I feel like whenever you come on, you talk about how incredibly cheap these stocks are and the really low multiples to free cash flow. It makes sense, but they never seem to get any less cheap.
Yeah, this best example could be some of the European financials. As an example, BNP is one of the biggest European banks. It trades at about 6 times earnings, yields 8 or 9%, has excess capital on the balance sheet, but trades at a significant discount, say, to its U.S. peer, J.P. Morgan, which trades at 1.6 times book value. The stocks have done all right because the earnings have been going up double digit and so have the share prices, but the valuations remain muted. And I think
what's going to change that, David? What's going to change that?
I think they have to continue to demonstrate earnings growth, and then the fluff has to come off with companies that are priced to perfection. And when you see that, you'll see a rotation. And when that rotation does happen, I believe it will be quite explosive. But
David,
I get the same questions from my clients. We know they're good value. We know they're throwing off lots of cash. We know they're paying it to their owners. But what's going to change? And I do think eventually, the value of financial asset is the free cash which it generates. And if you want to pay a low price for good quality businesses, this is how we measure it.